Bangladesh has forecasted that DSEX index will reach 10,000 points by 2026. Tell me some points behind the forecast.
Forecast of 10,000 index is not based on a wish. It's based on a lot of data and research. And we've seen this same story play out in Sri Lanka. We've seen this story play out in Pakistan, where actually markets have gone up closer to 200%. So we don't think that 100% is being very aggressive. We think it's actually quite conservative compared to what we've seen in the region.
In your equity strategy, Bangladesh has been compared to the past rallies of Pakistan and Sri Lanka. Is Bangladesh really at such a turning point?
If you look at the story of Sri Lanka and Pakistan, they were slightly more extreme in my view in terms of the downtrend compared to Bangladesh. Bangladesh's starting point was actually much better.
টিউএস মার্কেটসে স্বাগত জানাচ্ছি আমি আনিসুর রহমান। প্রিয় দর্শক, গত এক দেড় সপ্তাহ ধরে কিন্তু মার্কেট আমরা দেখছি নেতিবাচক প্রবণতায় যাচ্ছে। মার্কেট কিছুটা নিচের দিকে। এই অবস্থায় কিন্তু অনেকেই শঙ্কিত, বাট আশার কথা হচ্ছে যে বাংলাদেশে একটি বিদেশি প্রতিষ্ঠান ক্যাল বাংলাদেশের পুঁজিবাজার নিয়ে কিন্তু একটা সুখবর দিচ্ছে, বা তাদের একটা ভালো একটা ফোরকাস্ট রয়েছে যে 2026 সালের মধ্যে বাংলাদেশের শেয়ার মার্কেটে ঢাকা স্টক এক্সচেঞ্জের যে সূচক রয়েছে সেটি কিন্তু 10,000 পয়েন্টের কাছাকাছি চলে যাবে। এই পরিস্থিতিতে তাদের এই অ্যানালিসিস নিয়ে আমরা আলোচনা করব টিভিএস মার্কেটসে। এই আলোচনায় আমাদের সাথে অতিথি হয়েছেন ক্যাল বাংলাদেশের কান্ট্রি ডিরেক্টর এবং ক্যাল গ্লোবালের ম্যানেজিং ডিরেক্টর দিশান পুষ্পরাজা। Dishan, welcome to our show TVS Markets.
Thank you for having me.
Firstly, I want to know, making a prediction about the stock market is very risky, but your organization KL Bangladesh has forecasted that DSEX index will reach 10,000 points by 2026. Tell me some points behind the forecast.
Anis, I think it is a very bold forecast. Especially in a time where the markets are not doing great and there are a lot of uncertainties around. But we feel if we don't get the news out there, our view out there that the market is going to head in that direction, most of our investors will lose out, and that's what we don't want. Our forecast of 10,000 index is not based on a wish. It's based on a lot of data and research that we do, which we have done in Sri Lanka for more than 25 years, and the same approach that we have brought to Bangladesh as well. So when we started in 2022, we were actually quite negative about markets, also about currency, about interest rates. So over the past 3 years, we have been predicting most of these macro factors, and we have been accurate. That gives us the confidence that a lot of the work that we do is actually accurate, and it is on this basis that we have made this forecast as well. And a lot of that backing is coming from the macro fundamentals of Bangladesh. As you know, the country has gone through 3 years of a bad patch, where currency has depreciated, interest rates have gone up, and inflation was very high, markets had come down. But over the last 18 months, there's a lot of good work that has been done, particularly by the Bangladesh Bank, also by the government with the guidance of IMF, to stabilize the economy. Interest rates were raised, certain macro reforms were done, inflation has now largely been brought under control, it's on its way down. So a lot of good work has been done. Now the outcome of the good work sometimes is not felt immediately, it takes time, but in our view that time is now. Over the next 18-24 months, we think the economy is going to come back in a very strong way, and we can discuss that going forward as well. And along with the economy coming back and with interest rates coming down, investors, people with money are not going to be satisfied with single digit interest rates in fixed deposits. So a lot of that money is going to find its way into the markets. Companies are going to do well, and that is going to get reflected in the market as well. And we've seen this same story play out in Sri Lanka. We've seen this story play out in Pakistan, where actually markets have gone up closer to 200%. So we don't think that 100% is being very aggressive. We think it's actually quite conservative compared to what we've seen in the region.
I want to know the Cal Bangladesh macro report states that balance of payment and current accounts will remain surplus, and the dollar rate will be stay 122 to 125 taka. On what basis have this projection been made?
So fundamentally, as I mentioned, a lot of hard work was done over the past 12-18 months in raising interest rates. And one of the objectives of high interest rates and very tight monetary policy is to reduce demand. Now, that has actually happened. When you look at demand right now, credit growth is only at about 6.5%, which means there is no credit demand, which is not great for growth, but it is what is expected out of a tight monetary policy. So when you see credit growth dampened to 6.5%, an outcome of that is imports have also dropped quite a bit. So if you look at our current account over the last few months, the current account has been surplus after a very long time. And that's fundamentally coming from the fact that our imports have come down. So that means that the policy has had its desired effect. Now, as long as this level sustains, there is no further pressure on our currency because our current account is in surplus. Actually, Bangladesh Bank over the last few months has actually been intervening to allow to stop the currency from appreciating. Otherwise, Taka would have appreciated. Globally, also the US dollar has been weak. Over the last few months, the dollar has been weak. It's actually expected to continue to be weak because the US Fed is also going to start cutting interest rates. That helps us as well. So it's one is domestically, I think we have done a lot of good work, and internationally the dollar is also weak. So both of these combined means that we don't expect there to be any major shift in our currency view and also in our inflation view because demand has shrunk. People are not buying things, people are not consuming, which is what was expected out of tight monetary policy. Now that has been achieved.
By December 2025, inflation forecast of 6.5 to 7.5 has been made, and the one-year treasury bill rate is expected to come down 8.5 to 9 by the year end. How will your decline the interest rate environment affect the corporate borrowing and the market liquidity?
Right. So I think central bank, Bangladesh Bank's intervention to buy dollars means that every time they buy dollars, new money is released into the system. So over the last few months, interest rates which were as high as 12 and above have now come down to 9.5% already. It's already come into the range that we had forecasted. And we expect that this trend will continue, interest rates will continue to come down. Now, as liquidity increases in the market, because Bangladesh Bank is continuing to buy new dollars from the system, every time they buy dollars, new taka comes into the system. We expect that trend to continue, where the market liquidity will continue to improve. Interest rates will come down. Now, with lending rates or borrowing rates for companies, usually there is a bit of a delay between when treasury bill rates come down and corporate borrowings and personal borrowing rates come down. That's where banks make higher margins during this period, but they will eventually come down over the next few months. However, there is one specific factor to be aware of in Bangladesh is because, as you know, there are some troubled banks in the system. Most of these banks, and even some of the ones which are not troubled, do have a lot of non-performing loans, which means that their ability to lend is low. So what we will probably find is that the good borrowers will have access to very good rates, but average or not so great borrowers may still continue to find it difficult to borrow. That's going to be something that's going to continue in the next 12-18 months. I don't think that will change. But overall, borrowing rates will definitely continue to come down.
In your equity strategy, Bangladesh has been compared to the past rallies of Pakistan and Sri Lanka. Is Bangladesh rally at such a turning point?
So if you look at the story of Sri Lanka and Pakistan, they were slightly more extreme in my view in terms of the downtrend compared to Bangladesh. Bangladesh's starting point was actually much better than, say, Sri Lanka, where I come from, where at the peak of the crisis, the country had zero reserves, was essentially bankrupt. And on top of that, the government debt was more than 100% of GDP. Bangladesh's debt is less than 50% of GDP. So Bangladesh's starting point was not that bad. In fact, Bangladesh's reserves, even in the worst of situations, was still around 3 months worth of imports, which is much greater than what Sri Lanka had, which was zero. But both Pakistan and Sri Lanka went through very high inflation periods. So Sri Lanka had 70% inflation. Pakistan also had very high levels of inflation. Bangladesh, on the other hand, because its starting point was better, didn't have 50-60% inflation in any one year. But if you take the aggregate of the last 3-4 years, if you add up the fact that 22, 23, 24 and 25, we've had high inflation. In total, Bangladesh's inflation has also been 40 to 50%, which is quite high, which is what you've seen on the ground. People can't afford many things. But the bounce back of that is that when Sri Lanka got its macro under control, when inflation fell, and inflation fell from as high as 70%, actually went into negative territory for 2 or 3, I think about 8 to 10 months. Now it's back up to positive territory at the moment. Same for Pakistan. When inflation started falling and interest rates started falling, economy picks up again. And one of the things that you have to think about is when the economy adjusts to inflation. See, Bangladesh prices have gone up 40 to 50% in the last 4 years. In that same period, the stock market has actually come down 30 to 40%. So in real terms, for our stock market to get back to where it was 3 years ago, means a doubling of the market, because inflation has actually reduced the purchasing power. On top of that, market has also come down. So that is the adjustment that happened in Sri Lanka. That's the adjustment that happened in Pakistan, where as interest rates come down, asset prices re-rate to where it was supposed to be. So we are not talking here about sudden dramatic change in the economy. I don't think Sri Lanka's economy is still very much, as in a lot of good work has been done in Sri Lanka, but it's still very much a challenging position. There are many challenges to come in the next few years. Similar in Pakistan. So it's not that there was a transformation of the economy. It was getting the simple things, the macro fundamentals in place, which actually changed. And in our view, that has happened in Bangladesh as well. And actually, we are beyond that turning point. In our view, macro fundamentals have been brought back. So now it is time for the market to reflect that fact. And that's really the hypothesis of our story.
Do you think the foreign investment is the important role to rally up Bangladesh market?
So I certainly hope that foreign investments will come in. We deal with a lot of foreign investors in our day-to-day work. And a lot of them have been very confident of Bangladesh. Especially a lot of them have invested in Sri Lanka and in Pakistan, have seen 150-200% returns. So they all believe that Bangladesh will be the next big story. Some of them are waiting for elections because elections are around the corner. But I am confident that foreign investment will come back in and come back in a big way. Now, if you ask me, is that going to be the primary driver of the index going to 10,000? I don't think it is necessarily required. I think the domestic market, domestic investors will be sufficient to actually kind of move the market, because Bangladesh historically has been primarily a domestic dominated market. But foreign investment, I think, will come. And I hope that Cal will be able to play a big part in actually, marketing this story in our view and being able to generate that interest from overseas as well.
Which sector will play the main role for this rally?
Right. So if you look at the cycle, economic cycles and market cycles, we've just now finished a tightening cycle. So we are now, in our view, looking at a 3 to 4 year growth of the economy as a whole. And during this period, my answer to that question is different industries do well at different points of the cycle. So initially, as inflation comes down and the average individual has extra 5 taka, 10 taka in his pocket, the first thing they do is to go and place an extra reload on their phone or buy an extra bar of soap. So initially, the first part of this cycle, the companies that do well are what we call consumer staples. The other set of companies that do well during this part of the cycle are the banks. As I mentioned earlier, usually when interest rates come down, banks reprice their borrowing deposit rates fast. Already we've seen at least 2 or 3 drops that banks have done in their deposit rates. Lending rates, they don't adjust as fast. So during this period, their margins improve quite a lot. Plus also the really good banks who have provided for bad loans usually do write-backs of some of these provisions during this time. So we think banks are a very big part of the index as well. Banks will also do very well in the first part of the cycle. As confidence builds and people are more willing to make larger purchases, then we will find personal care companies, televisions, washing machine companies, because as people get more confident, they start spending on slightly bigger ticket items. So then in the middle part of that cycle, you see those kinds of companies doing extremely well. And then towards the end, when people get very confident, then they are comfortable borrowing and buying a house or building a house. So towards the end, the real estate market also tends to do well. So at different points of the cycle, different industries will do well. But as a combination, all of them you will see big earnings growth. So we are expecting that earnings will grow at around 40% over the next 24 months. And that earnings growth will come at different times, but across all of these industries.
Excellent observation. But I want to know one thing, that if inflation and fiscal slippage increase beyond the expectation, how will strategy change?
Right. So again, I'll break that answer into 2. So inflation coming down is one of the primary basis on which we have formulated our view. And every all the data that we track suggests that inflation is definitely coming down. And with that, interest rates will come down, and that's going to help the market. Now, if inflation does not come down for whatever reason, or does not come or kind of remains at these levels, then our view will get delayed. I don't think it is going to go away, but instead of 18 to 24 months, it may be 24 to 36 months. But frankly, I don't see that happening. We do a lot of work in looking at the actual on the ground situation. And other than for food prices, moving up and down in the last 2-3 months, generally inflation has continued to come down. So we think that will continue. Now with fiscal slippage, frankly, a lot of this our view on the market is driven by monetary policy rather than fiscal policy. Fiscal policy will affect Bangladesh's long-term trajectory, because if we don't get our fiscal act together, we will face a larger crisis maybe in 5 years or 10 years, similar to Sri Lanka, which kind of increased its debt quite dramatically. But I don't think fiscal slippage is going to affect our economy now. So fiscal slippage will not affect our view at all, but it is for the benefit of all Bangladeshis that fiscal consolidation continues to happen, and that we avoid the mistakes that other countries have made in this regard. But I think that is for a later time and not now.
You are a Sri Lankan. I would like to know your analysis about the country economy recover and the rest of the capital market.
Sri Lanka's story was clearly an example for many countries, both in what not to do and also then what needs to be done in order to, it's as a country, Sri Lanka got into this crisis because of, 2 or 3 big reasons. One was, of course, the excessive amount of debt, especially on the government balance sheet. Our tax revenue was about 7% of GDP, and we continue to run these big deficits over very long periods of time. Second is, in response to COVID, the Central Bank of Sri Lanka printed an enormous amount of money, which then created the huge inflation in the country as well as the pressure on the currency. And the policymakers, which is central bank, was not allowed to function independently in order to bring this under control. Then we also had on top of that policymakers who believed that for the betterment of the people, markets should not be allowed to function. So currency rates were capped at a particular point, and interest rates were not allowed to move as they should, and that created all these distortions and black markets and queues for petrol and all of these things. And that's really when Sri Lanka hit the wall in terms of a crisis. But also it's an example of what to do after that. So given that we had this backdrop of all these troubles that we had gone through, especially with the support of the IMF and very good policymakers after that, it was really a U-turn on all these three factors. Number one was allowing markets to function, to make sure that we don't have subsidies on fuel and electricity. Fuel prices were raised by 300-400% at one point. Electricity prices were raised by 400%. Taxes were doubled almost overnight. And so there was a lot of consolidation that happened, and also markets were allowed to function. And along with that, the central bank was also allowed to make the right monetary policy decisions. Interest rates were raised at one point. Treasury bill rates were as high as 32%. Companies were borrowing at 35% in order to bring the economy back under control. So it wasn't very popular. Frankly, it wasn't very popular. The president who spearheaded a lot of these was voted out of power because of some of these policies. But those policies worked. And it is because of those decisive actions that today the country has bounced back quite fast. Growth is at close to 5%. Inflation has come down very much under control. It's below the inflation target that the central bank has set. Stock markets have gone up 150%. So it is also a lesson of what to do. But it is first a lesson of what not to do, and also then a lesson of what needs to be done in order for a country to recover. So it is certainly a lesson. It's an experience of having lived through it, because it was not a very easy time for the country. I think so many people fell into poverty during that time. We had huge migration outside of the country because of it. So country went through a difficult time. So it was a very expensive lesson, but it appears that lesson has helped now in terms of silver lining for what now Sri Lanka has in store for the next few years.
Finally, I want to know about your plan for Bangladesh capital market as a investment banker.
Right. So I think first things first is when I speak to a lot of local investors and local companies, everybody has, in the here and now, given the challenges that the economy faces, may not see the full potential that Bangladesh has. As a country of close to 180 million people, a very young population, increasingly getting educated, rising middle income, accumulation of wealth that's happening in the country, there is a huge opportunity in our view for the country to grow. We really see this opportunity, having seen this in many other countries as well, that Bangladesh will go in the same direction. For instance, if you look at the per capita income of Bangladesh at the moment, which is in the range of about 2,500 to 2,700, that is a point which we call the inflection point, where suddenly from here on, up to a certain level of income, that income is primarily used to meet basic necessities. Beyond this point, every additional dollar of income is either saved or spent on consumption and growth. We've seen this in many countries. We saw this in China. China first grew as a manufacturing hub, as much as Bangladesh has grown over the last 2 decades as a manufacturing hub. But the real change in China happened when, at a certain income level, people become consumers, and suddenly the consumption of the economy grows multifold. And we see that happening in Bangladesh as well. We see wealth accumulating at a record pace over the next 10-15 years. So that is the real opportunity that we see. So in this opportunity, where we see opportunity as CAL, is we see some gaps. Number one, there is very little that's done in terms of actually educating the investors and in really helping predict markets. We do genuinely believe that markets can be predicted, although I know that there is a lot of skepticism around it. We think markets can be predicted, and in being able to predict that, help clients actually benefit from this growth. So that's one of our fortes, one of our focuses is to build a research-driven investment house, number one. Number two is, I think in terms of wealth management and asset management and investing, there is very few product offerings out there. Everything that's there is very plain vanilla, and we think with our experience from many different countries can bring new products and new innovations to the market. And with, of course, a very young population, also to be able to do this digitally with technology is something that we are very excited about, as one of the first few broking firms also to be enabled on OMS, and many other things that we are planning over the next few months to be able to do this digitally rather than having brick and mortar operations. The other part that we are quite excited about is Bangladesh as an economy is largely driven by family businesses. It's an area that we specialize in. Many businesses over the next 5-10 years will transition from first generation to second generation businesses. Now, this period is a period of turmoil for most companies, because taking over from an entrepreneur is not easy. And the next generation, we've seen many examples of quarrels between family members bringing the business down. But this is also a huge period of opportunity. As the next generations comes in, they have a different vision for their businesses, they have a different vision for the country, and enabling them and positioning them and helping them achieve that vision through raising capital for them, being able to consolidate their businesses for them, and to help them access markets, and also just help them manage their wealth, is again, I think, an area where we see a lot of opportunity and a big need in the country. So these are the areas that we are looking to focus on, because we see big opportunity for Bangladesh over the next 10 years. And we are here to play our part in helping realize that potential.
Thank you very much, Deshan, for being a guest on TVS Markets.
Thank you for having me.
প্রিয় দর্শক, আমরা কথা বলছিলাম শ্রীলঙ্কান ইনভেস্টমেন্ট ব্যাংকার দেশান পুষ্পরাজের সাথে, যিনি ক্যাল গ্লোবালের কান্ট্রি ডিরেক্টর হিসেবে, ম্যানেজিং ডিরেক্টর হিসেবে কাজ করছেন এবং ক্যাল বাংলাদেশের কান্ট্রি ডিরেক্টর হিসেবে কাজ করছেন। তিনি কিন্তু বলছিলেন যে বাংলাদেশের যে শেয়ার বাজার, বাংলাদেশের যে অর্থনীতি, এই বিভিন্ন বিষয়ের সূচকগুলো নিয়ে কথা বলছিলেন যে সামনে বাংলাদেশে কিন্তু বড় ধরনের সুসময় অপেক্ষা করছে। তার তিনি মনে করছেন যে এই সময়গুলোতে আমাদের যেমন ইন্টারেস্ট রেট কমে আসবে, সেই সাথে কনজাম্পশন বাড়বে, বলছেন ইনফ্লেশন কমবে, আর মানুষজনের কাছে ইনভেস্ট করার মতো অর্থ আসবে হাতে, যা আসলে পুঁজিবাজারে যাওয়ার জন্য তৈরি হচ্ছে। কারণ হচ্ছে তারা বলছে যে ব্যাংকের ইন্টারেস্ট যখন কমে যাবে, মানুষ তখন সিঙ্গেল ডিজিটে যে লভ্যাংশ এটা নেওয়ার জন্য কিন্তু আসলে মানুষ প্রস্তুত থাকবে না। তো এই টাকাগুলো তারা মনে করছেন যে ক্যাপিটাল মার্কেটে ঢুকবে, আর এই ক্যাপিটাল মার্কেটে ঢুকলে তাদের যে প্রেডিকশন, যে 2026-এর যে ডিসেম্বর এর মধ্যে ঢাকা স্টক এক্সচেঞ্জের প্রধান সূচক কিন্তু 10,000 পয়েন্টে যাবে বলে তারা ফোরকাস্ট করছেন। বিনিয়োগ যেহেতু আপনার, সুতরাং বিনিয়োগ করার ক্ষেত্রে রিসার্চের তথ্য নিতে পারেন, বাট সিদ্ধান্ত কিন্তু আপনার। টিভিএস মার্কেটসের পরবর্তী পর্ব দেখার আমন্ত্রণ রইল।